Welcome back guys, in today's video we will taking a look at some new updates on Palantir stock with ticker symbol PLTR and its price prediction for next few months. So let's get straight to it. Now just before we get started, this is a friendly reminder to please subscribe this channel and leave your thoughts about this video down in comment section. If you take a look at 6-month chart of PLTR, you will see that it was up by 148% in Q4 of 2020, but only up by 6.88% year-to-date 2021. PLTR gained a lot in 2020, but the question is, will upward trend continue in 2021? Yesterday, after lockup period expiration, 80% of PLTR stock out for trading. When the Denver-based firm went public via a direct listing back in September, early investors were forced to hold their shares due to a lockup clause. Now that the clause has expired, it means a number of big investors in Palantir could be looking to cash out amid the recent rally in the share price. If they do, it could drive the stock down significantly because of excessive supply of PLTR share. In coming days, I am expecting a major price correction in PLTR stock and will advise my viewers to wait to buy PLTR at dip. Maybe some of you don't know what Palantir does and who Palantir is, or any type of circumstance. Well, Palantir Technologies Incorporated develops software to analyze information. The company offers solutions support many kinds of data including structured, unstructured, relational, temporal, and geospatial. Palantir Technologies serves customers worldwide. Its sector is technology and it operates in software and technology industry. By offering software and, crucially, teams of engineers that customize the software, Palantir helps organizations make sense of vast amounts of data. It helps gather information from various sources like internet traffic and cell phone records and analyzes that information. It puts those disparate pieces together into something that makes sense to its users, like a visual display. As per their latest earnings, company generated $1.1 billion in revenue for year 2020, that is up by 47% from year 2019, and company is expecting growth in revenue of 30% in 2021, which is 18% higher than AI data analytics industry growth rate of 12% for 2021, but still is compared to its forward price to earnings ratio that is currently trading at almost 35x, the growth rate is much lower. The company shares are currently trading at a higher value because of its higher expected growth. As compared to its competitors, Palantir remains deeply loss-making, with net margins standing at -78% in 2019, although the number could improve to -34% this year as revenue growth picks up. In comparison, Splunk's margins stood at -14% during its most recent fiscal year, while Datadog's margins stood at -5%. This analysis also does not support a buy decision at current price. Now take a look at their price-to-sales ratio as compared to its competitors. Datadog is valued at about 47x projected revenue, given its high growth rate and lower losses. Splunk is valued at a more modest 12x projected 2021 revenues, as growth is likely to cool over the next 2 years. Price-to-sales multiple also does not support Palantir at current share price level. Next we will take a look at growth comparison. Palantir's annual revenue growth between 2018 to 2020 is likely to stand at about 33%, while its competitors Splunk, another big data and analytics provider, grew revenue at 36% annually between FY17 FY20, and Datadog, a SaaS company that provides tools to monitor cloud-scale applications, should see revenue grow 80% annually between 2017 and 2020. In growth comparison, Palantir growth level also does not support current company valuation. Next, if we take a look at breakdown of revenue, with 56% of revenue from government, it has a much concentrated position in government contracts that increase its risk significantly. The Army's attempt to develop a more expensive in-house solution illustrates there is a risk that government agencies eventually move away from Palantir in the future. Reputation and social acceptance is also a risk. Tech companies often see employees engage in protests when a company contracts with the government on AI-driven war missions and privacy issues that potentially threaten human rights. In the past, Google ended a contract with the Pentagon when employees protested using AI for lethal purposes. Karp became controversial and challenged Google on this decision, saying it was a loser position. This can backfire as Palantir may not be able to attract top talent as AI companies begin to compete from a small pool of AI developers and engineers who have proven to protest and walk out of company projects they feel are unethical. Amazon, also, banned facial recognition for law enforcement for 1 year following the George Floyd protests. Therefore, Karp's personality could be considered a risk as the tech world begins to explore and support ethical AI development. Next, we will talk about some of the Wall Street biggest ETF funds. One of the biggest supporter of PLTR stock is Cathie Wood, CEO of Ark Invest. Many retail investors and followers of Cathie Wood is interested in knowing why Ark Investment buy 1.5 million shares and increase its position to 4.1 million shares in Palantir when the stock is going down day by day and even will go more when the early investors will cash out. Before discussing this, let's take a look at Cathie Wood interview to CNBC.
Let me ask you about Palantir, which we just found out you've added to. Can you tell our viewers why you added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and we would say in some cases short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively for going short-term profitability in order to really catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are seeing in the future and investing in the future in ways that companies, governments, but increasingly companies are going to need, especially as we're competing against China. I think we've been, again, with this short-term time horizon, we have not been spending enough in innovation. And so, Palantir's attitude is refreshing. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winner-take-most markets. And the autonomous taxi world is a very good example of that. That is why our confidence in Tesla, going back to the largest position in our portfolio, is so high.
In a nutshell, Cathie Wood believes PLTR is good for a long-term investment and they are not looking for short-term profits. But Palantir fundamentals does not support its current price levels. If you have also crush on Cathie Wood and you are a passive investor with extra money and can hold this stock long-term, then you can buy Palantir and hold. But if you are an active investor and looking to achieve some aspirational goals, like buying a Lamborghini or Ferrari in a month and looking for stock that will double-triple your investment within weeks, this stock is not suitable for you. Thank you for watching video. Please don't forget to subscribe and like this video. It will encourage me to do more in-depth analysis of different stocks. Thank you.